JCPenney doubling down on long-term growth. The retailer announcing a new $1 billion self-funded reinvestment, and this to zero in on areas like operations and customer service, including upgraded its own online presence and remodeling its stores. JCPenney CEO Marc Rosen joins us now alongside Yahoo Finance's Brooke DePalma. Marc, good to have you here with us. What really prompted this decision for the company?
Thank you, and thank you for having me today. As we've looked at the shopping environment right now, we just think that our customer more than ever deserves that shopping experience where they don't have to make the trade-off between accessible fashion and great value. And we've been reinvesting in our business over the last couple of years. We really improved our product portfolio and reinvested in a lot of our private label brands like Stafford and Worthington. And we're also strengthening our relationships with brands like Levi's and Adidas and Dickies. And as we've got that shopping environment right, and as we're looking at what the customer needs right now, they're looking for a sense of belonging and a place where they can find the product that they want at a price they want without having to make the trade-offs that they have to make in their everyday life. And we're really here for them to make it count.
Good morning, Marc. Let's hone in on who exactly that customer is. We're seeing other retailers expand into bringing in other income cohorts, but you guys are really focusing in on America's working families. Why are you honing in on that that population of people, and what sort of return are you seeing by focusing in on America's working families?
You're right, exactly right. Our core customer is America's working families, and we did a lot of research as we went into this investment and as we're focusing on the way that we're going to communicate that to our customers. And what we found is our customers are the teachers that teach our children. Our customers are the construction workers that build the homes that we live in and the buildings that we go to work in, and the medical workers that take care of us and take care of our families. And we think that more than ever, that consumer is looking for a place where they can find accessible fashion. They're looking for a place where they can find great styles and great prices and a value that they're looking for, that they can still make those moments with their family count without really breaking the bank. And that's challenging right now, given the economy and everything that the customer's seeing. And we're actually seeing great results and an improved return. So as we look at what's happened, we're seeing that our customers are visiting us more frequently. That's a metric that we've watched since we've started this investment, is frequency of customer visit. And we're seeing that our core customers are visiting us with more than 5% increase versus last year. And some of our core customer segments that we're really focused on are visiting us more than 20% increase versus last year.
So Marc, you haven't seen any pullback from the consumer?
So what we are seeing is that the consumer's a little bit more discreet about what they're buying. And so we've seen a lot of growth in our private label products. And that's one of the great things that we're able to bring our customer is great private label brands like Stafford, like Worthington, like Mutual Weave to our customer at a great value. And we're able to do that. A little bit over half of our sales come from our private label brands that we source, design, and produce and are exclusive to JCPenney. And what our customers finding is that price point, that opening price point private label is much more relevant to them and lets them save money on clothing so that they can put more time or more money into food on the table for their families and to going to places to spend time with their family.
Marc, while you're announcing that $1 billion reinvestment today, you've really been reinvesting in the business for almost 2 years now at the helm. In the past year, how much would you say that JCPenney's has reinvested in the business when you think about the reintroduction of these private brands among so many other major investments?
So the over $1 billion that we talked about by FY25 is really over the 3-year period, and that started this year. So it's a little bit less than a third of that is this year. And we've invested that into improved site experience online for our customers so that when they come to jcp.com, they're able to search and find product better, and they're seeing better product imagery and more of a perspective on outfitting. We've already done over 100 store remodels where we're improving new paint, improved lighting, better fitting room experience, centralized checkout, and we've just started putting in new technology. And then we've also invested in our supply chain and our merchandising tools to make sure we have the right product there for the customer at the right time.
Marc, as more manufacturers of apparel, footwear, and many of the goods that JCPenney sells are going more direct to consumer or leveraging other channels. How has that impacted the inventory mix that you're seeing, especially among some of the names that are household known?
So I mentioned earlier that we're about 50-50. 50% of our sales come from our private label brands, but many of those private label brands are brands that consumers know and love and have seen for years, brands like Liz Claiborne or brands like Stafford. And then about a half of the sales come from national brands. And we think that's a really healthy mix for our consumer and also for our business. But what we're seeing with the economy is that, customers are looking for those national brands too. And we've been able, and we're encouraged by the national brands that we've been able to add into our store and really strengthen our partnership with. And like I mentioned before, that's brands like Dickies, that's brands like Adidas, that's brands like Levi's that absolutely are strengthening their relationship with us and our customer.
Marc, one of the headwinds facing the industry has been retail theft. We've heard this called out from a number of your rivals over the last several weeks. Are you seeing that at JCPenney, and how big of a headwind is that?
I think that the organized retail crime is a challenge that has been facing the industry overall. We have seen that in our stores. We're really focused on that operationally. We saw a bit of an increase in the first half, but we're seeing that flatten as we go into the second half, and we're managing that operationally through the business.
And in addition to this reinvestment out today, you're also introducing AI technology to help throughput in the store. Can you break down how exactly that's helping drive sales and ultimately helping employees at the store level?
Right. So that really fits into a lot of the tools that I talked about for our merchants and for our supply chain. And it's really focused on using all the data we have about customers and their purchases. If you think about it, we have over 50 million customers that have visited our stores in the last 3 years. And over 70% of our purchases are from loyalty program and credit. So we have great data on what customers are buying. What we're investing in is AI that helps us use that data to understand which customers are in which stores so that we can get the right product to them. It's also helping us get products to customers faster. So we've taken a day off the shipping time to get product to our customer when they order on jcp.com. And that's come because we're able to use the AI to decide where we're going to source that from, whether it comes from in-store or distribution center, to ship it to the customer.
Marc, in order to protect margins, does JCPenney need to further reduce the square footage that it operates?
So if we look right now at the stores that we're operating, we have about 670 stores, and we're comfortable with that store portfolio and the size of our stores, and we don't see that changing in the near future. We believe that customers are continuing to shop both in store and online, and the stores play an important part, which is why we're investing in the remodeling of our store fleet and why that's part of this over $1 billion investment.
And Marc, really quickly, we're hearing from other retailers about credit card delinquencies on the rise. Are you seeing any impact on the JCPenney credit card?
Well, what we are seeing is that given the economy right now, our customer is more challenged than ever. I talked to our customers, our teachers and construction workers and medical workers. And what that family's seeing is that their monthly expenses versus 2 years ago have gone up over $700 a month. That's really, really significant. That's why we think that accessible fashion at a great value is even more important to them. And that is why we're investing right now. As far as credit card delinquencies, as we've looked at our portfolio, we have not seen an increase in delinquencies.
Marc Rosen, JCPenney CEO, thanks so much for joining. And of course, our thanks to Brooke DePalma.
Thank you for having me.